The sound of success.
It's the morning drive here at Mira Business FM, and real estate in Saudi Arabia. New data from Cavendish Maxwell. The numbers are staggering. 57,000 new units heading into Riyadh's pipeline. Quarterly sales in the capital alone hitting 17.6 billion riyals. But it's not just Riyadh. Dammam is seeing record-breaking demand, and a major regulatory shift in foreign ownership is about to change the game for 2026. So, with us to break down Q3 2025 performance, the figures there, and to look ahead at what these 100,000 plus upcoming units mean for the market, it's not just Riyadh, is Sean Heckford, Director of Built Asset Consulting at Cavendish Maxwell. Sean, it's good to have you on the programme.
Morning, Tim. Thanks for having me on. Much appreciated from a very cold Riyadh.
It's funny, isn't it? At the moment, I was downstairs at 6:30 this morning thinking, it's a little bit parky, should have put the cardigan on the way here. Sean, can we start with that 17.6 billion Riyal figure for Riyadh in Q3? I mean, even with rising prices, the market's demonstrating pretty considerable resilience. What's driving this kind of confidence in the capital's residential market?
Yeah, I mean, Tim, to be honest, Riyadh's performance this quarter has been remarkable. It's driven primarily by the Vision 2030 growth, government housing initiatives, and a very strong investor confidence in premium segments. But to break that down a little bit, and for those listeners, viewers that haven't read the report, approximately 13,000 residential sales transactions happened in Q3 of 25. This marked an increase of 18.7% from Q2. Now, that said, compare that to the same period last year, it's declined by 43%. That's primarily driven by the affordability pressures following on rapid price appreciation that we saw in 2024. Now, obviously, the government have done some things to address that, and we'll go on to that later, I'm sure. Despite these challenges, that quarter-on-quarter improvement just indicates that the demand continues to persist.
Well, it does, and 2024 was a remarkable year, and that's nowhere near where the kind of adjectives we could use. Your report highlights Dammam as a standout performer, 60% year-on-year growth. Why such a shift to the Eastern Province?
I wouldn't say it's a shift to the Eastern Province. I would say it's the Eastern Province becoming more prevalent.
Okay.
There's several reasons for that. The Eastern Province is the kingdom's major industrial and logistics hub. There's been an awful lot of investment in these areas, and obviously that's creating jobs, which in turn is driving demand for housing. There's also the ongoing development of the Causeway connection and other regional infrastructure that's all focused around that Eastern Province because of the industrial and logistics that's based there. So that's also having a huge impact, and obviously there's a long-term appeal to investing in that region, and obviously you need real estate or residential real estate to support that. But of course, one of the other primary in residential driving factors is cost. It's a much more affordable and accessible price point for buyers and renters in that region.
One of the most talked about points, Sean, in the report is the upcoming foreign ownership law. How much of a game changer is this going to be for the market this year and going forward? And are we already seeing investors, positioning themselves for it?
Yeah. Opening up prime locations to foreign ownership is bringing international interest. It's going to increase demand and price premiums, especially in the luxury segments. I mean, we've had it reported that the Trump Organization is working with a Saudi partner in this luxury sector. But to break that down again a little bit more, there's a wider pool of international investors now that are looking at Saudi as a result of these changes in the legislation. We anticipate a substantial increase in that foreign investment, direct investment, of course. There'll be greater liquidity, transparency, and competition within that, particularly within the luxury sector. And whilst the law's impact will unfold over the next few years, it's not, it's going to take some time to settle down, people to get their heads around what they can and can't do. But there's many international entities exploring the market and seeking to establish partnerships and identify opportunities ahead of the law's full implementation. The other thing, it's expected and we anticipate it's going to breathe a bit of additional life into some of the bigger projects or the mega projects, giga projects that are ongoing, such as Diriyah and Qiddiya, where they're close to population centres. Foreign investors could see this as a good opportunity for a quick ROI, because they're up they're up and running, to be honest. But they're growing and that additional investment is going to have we think is going to have a huge impact on those developments. I mean, the other thing that we've discussed internally is, there's a large population of foreign residents, as we know. I'm one. And it gives a paradigm shift. It provides a pathway from traditional transient, everybody's got to rent, nobody can buy a house, to a little bit more stability. If you want to invest in Saudi Arabia and you want to set down some deeper roots because you see this is the future for yourself and your family, this makes it a lot more realistic, achievable, and gives people more confidence to invest and invest in the country, not just invest in real estate. But of course, the other thing that was announced this week, and I don't know if you've touched on it yet, is the announcement that foreigners can now trade Saudi stocks and shares from February. That's going to have a huge boost to confidence, not in the country, and obviously that's going to have a knock-on effect to residential real estate as well.
It's so interesting that because both of these, the foreign ownership, foreigners being able to buy stocks and shares really ups the ante for the region as well. And we've seen this rate of change here in Dubai since foreign ownership was initiated very early 2000s. I remember the days that came in. That's going to happen in Saudi Arabia, but it's the rate at which the changes happen. It's very hard to keep up with, Sean.
Oh, it is indeed. Trying to keep abreast of these developments as they're happening is a challenge. Fortunately, at Cavendish Maxwell, we have a great research team that stay on top of all this. And obviously, with me being here in Riyadh, I'm on the ground, so I'm getting a feel from the Saudi nationals themselves, talking to people around the city and around the country as to what's happening. But everybody's in the same position. It's moving so fast. And I've got to be honest, I don't think any other country in the world has ever moved this quickly. I mean, Dubai's been a huge success, but that's taken, let's say, 20, 25 years to actually get to where it is now. These guys are aiming in single figures to achieve the same things. It's phenomenal.
No, it really is. It's very hard to keep it in perspective, I guess. Look, let's get back to Riyadh slightly. You projected over 105,000 units in the pipeline over the next 2 years. Riyadh commands the highest rental upticks. Is this influx of supply going to be enough to stabilise prices for residents, or is demand just going to keep outstripping itself?
The new directive to cap rental increases in Riyadh for 5 years is probably the most critical factor for price stability.
Right.
The influx of 105,000 new units, it will influence the initial asking price for vacant properties. The demand for housing in Riyadh is going to remain incredibly strong. There's no question about that. And this new supply is essential to absorb a large portion of that immediate demand. Without these new units, the starting rent for new contracts would be significantly higher, to be honest. So this new supply is going to help moderate the entry point for residents signing new leases. That rent cap is the primary tool that will stabilise those rents. There's no question about that. But the underlying demand it's going to stay very high. There's no question about it. Whether or not the supply can meet that demand, I'm not. I can't comment on that at the moment. It really is an unknown entity, for want of a better term. There's plenty of supply coming online, as we've said, in the next 2 years, but is it going to be enough? It depends how the market shifts, what the projects, how they progress. If they're in line with the 2030 vision, then, which they appear to be, it's still going to be tight. There's a huge demand here. And of course, elsewhere outside Riyadh, market forces are going to continue to dictate. It's simple as that. You've got to bear in mind, there's a huge percentage of Saudi nationals that are under the age of 14 at the moment. I think it's something like 34% of the Saudi nationals are under 14. Well, of course, as they get older and they start to come of age, they're all going to want to live in their own accommodation. So that, and lots of those guys are in Riyadh. So, yeah, there is a huge supply that's forecast. Is it enough? How long's a piece of string, I think, is the honest answer.
No, fair. Unfortunately, I have to ask these questions, but that's
No,
so
that's fair
interesting.
enough.
Saudi nationals at 34%, was it you said, under 14, so in line with 2030. It's going to be a very interesting time for sure. How about the recent reforms to the white land tax, Sean, influencing developer behaviour? Is that going to mean more frozen land hitting the market for development, do you think?
It's starting to get unlocked, that's for certain. Nobody wants to pay those taxes, additional taxes, and they're considerable, to be fair.
Right.
They are changing behaviour. I was talking to one Saudi national 2 days ago, actually, and he was saying that, those taxes are crippling. 10% of the value of the land per annum if you don't develop it. So yes, it is having an impact. Whether it's going to have a massive impact going straight away, I'm not too sure. A lot of people don't know what to do with their land, if the truth be told at the moment. There's something that Cavendish Maxwell does quite a lot of, is the highest and best use case scenario. Strategic consulting, and we help people work out what they can do with that land, or even an existing asset. If they want to knock it down, they're going to redevelop it, or it's an empty asset and maybe it was built in the wrong asset class. What should it be repurposed to? And we often help with that decision-making process through a consulting process. The trend at the moment seems to be mixed use, so that maximising that land value with integrated communities. So I think it's started the ball rolling, and I think it will continue to roll this year, definitely, because nobody wants to pay those taxes.
No. As we look towards the end of next year, your figures in the report, 52,400 units expected to be delivered across Riyadh, Jeddah and Dammam. What should potential home buyers and institutional investors be watching most closely?
That's a really interesting crystal ball question. However,
I've got more of those if you want them.
Buyers and investors should focus on location-specific supply risk, absorption rates, product segmentation, rather than the headline delivery numbers, to be honest. Home buyers, affordability and financing conditions, they're always going to be key. Mortgage rate trends, they're going to influence affordability and sales, no question about it. For institutional investors, rental sustainability is going to be essential. Tenant depth and regulatory execution around foreign ownership, which is still working itself out, to be honest, will matter far more than short-term price movements. Not all parts of the market are going to perform equally anymore. There's no question about that. So people have to be careful about what asset selection they make, particularly the institutional investors. You want me to summarize that in a soundbite? Watch delivery versus absorption, foreign ownership rollout, and mortgage rate trends. They're going to define the market dynamics for 26.
Okay, well, I was going to ask you, I had a couple more questions I wanted to throw at you, and really just general thoughts. I hate asking for predictions. I very often do. I don't really like doing it, getting people to offer predictions. It's not really fair, but I'm interested generally in the Saudi residential market. If I
Mhm.
can ask you about that overall, and then maybe a little bit on Riyadh, then Jeddah, and then Dammam. I mean, according to your report, the market in Saudi Arabia displayed varied performance, albeit pretty strong, pretty positive performance across
Mhm.
major cities Q3 2025. Now, I get that you see the market as entering a transitional phase at this point in time. But if
Yeah.
you were to look ahead and I was to say to you, how do you anticipate characterizing the market? I say to you, so what's the Saudi residential market like? What would your kind of two-liner be, Sean?
I went to Cityscape in Riyadh. It would have been just before the end of last year.
Mm,
And if you wanted to know what the state of the residential market in Saudi Arabia was, you just had to be at that exhibition.
right.
I was dumbfounded when I left the exhibition at, let's say, 5 o'clock, 5:30 every night, by the number of Saudi nationals that were streaming into that huge exhibition. And it was something I've never seen before. And the events in Dubai used to be big, but this dispelled that into insignificance. The number of Saudi nationals that were streaming in to buy residential property was mind blowing. The Saudis have got the residential real estate bug. There's no question about that. And I think the residential market is going to thrive for the foreseeable future. Given the young age of the Saudi population, that's going to continue for a considerable number of years.
Mm,
And with um, the appetite for, let's say, more Western, and I don't like that term, but it's a reality. The types of development that are being built now are far from the traditional stark high-rise towers for apartments or not gated, walled villas
mm.
where multiple family groups would live in one large villa. That's all history now, in my opinion. We're now migrating to multi-use developments where there are different types of residential accommodation in one environment. So there will be apartment blocks and villas and townhouses, etc., open spaces, retail and leisure facilities, sports facilities, all in one master community. Dubai's been doing something similar, and Saudi certainly is swinging and maybe taking that to another level. And I think that's where the residential market is going in Saudi Arabia. Does that
So,
answer your question?
no, it does. It's so interesting because it marks, as much as anything, there's a demographic shift happening. There's also,
Yeah.
I think, from what you're saying, something of a cultural shift happening, perhaps a wider community feel almost.
There is, but they're still maintaining their cultural identity. There's no question about that.
Mm,
If you go to some of the retail and leisure developments that are now up and running in Riyadh, for example, they are absolutely stunning. You know, you can equate them to Dubai Marina, that sort of area, retail. Yet when you go there in the evening, which is obviously when they're most busy, 80-90% of the ladies are still in their traditional dress. There are family groups of Saudis with young children, all in traditional dress as a family group. So I think the cultural identity is still being maintained, despite the fact that the setting is changing slightly,
mm.
if that makes sense.
No, it does. It's just so interesting to hear. You know, you're on the ground, living through this, I suppose. No predictions again, but given the growth in Riyadh, particularly in 2024, affordability does remain an issue. I'm interested in a little bit more in your thoughts on the government. The 5-year rental freeze last September, how that was received, and also how effective it's being seen, is seen to be. in addressing those affordability concerns so far?
Well, I think the renters themselves, the tenants, were very pleased.
For sure.
However, the landlords maybe not so. And I have no doubt that it's got to settle down, Tim.
Right.
It's a new law that's been implemented very quickly, and yes, it does have to settle down. What the impact could be on new property rental prices that are hitting the market really is yet to be established. People could be offsetting their potential losses or reductions for 5 years by setting a rent now. We've not really seen much evidence of that to date, but that will probably play out by the time we produce our next report. Or maybe it might take 6 months, I think, to settle. I can't forecast anything at the moment. I've got my own personal views, but it would be wrong of me to articulate them during this call, to be honest.
Okay. We haven't talked about Jeddah very much at all. Do you, in terms of signs of an uptick, perhaps even a return to somewhere close to 2024 levels seen in Jeddah, any expectations there?
Jeddah is... There's plenty going on in Jeddah. There's no question about that. And I personally, the numbers they're okay. I don't think there's going to be a huge problem in Jeddah. There's still quite a few projects that are forecast for Jeddah. Obviously, it's got the advantage of being on the coast, and from a residential perspective, that's always a bonus. So. Yeah, I'm not overly concerned about Jeddah. There's been a bit of a downturn last year, but it started to pick up in Q3. So I think I personally, and looking at the numbers, that's going to continue.
I'm a little bit afraid that I'm painting this in a negative fashion, and I'm not, because the figures are overwhelmingly positive. I just think it's interesting comparing 2024 to 2025 and looking ahead. It's the usual thing, I think, at the beginning of the year in lots of interviews. Final thing I wanted to ask you, robust demand seen last year in Dammam. We've spoken about that. The more affordable option of the three main cities you have examined in your report, more of the same going forwards?
I think so.
Right.
I think so. Given everything that's happening in the eastern region, there's no question Dammam is going to continue to grow.
Do you know what, Sean? I've really enjoyed talking to you this morning. Very general, I know, but I appreciate you joining us. Sean Heckford is the Director of Built Asset Consulting at Cavendish Maxwell, based in Riyadh. Thanks for coming on.
Tim, thank you very much, and have a good morning.
Do appreciate it. Thank you. It's the Morning Drive. This is Mira Business FM. Like and subscribe. It's always appreciated if you can do that. Wherever you find us across socials, you can get in touch. Let us know what you think. And everything we do is available to listen and or watch. Again, find us where you get your podcasts from. Search Mira Business FM.
Mira Business FM, your daily guide to the markets, money, and more.